Walmart-owned Flipkart is facing a formidable competitor, Amazon, and both the US headquartered giants control over 60% of Indian e-commerce space. Reliance, meanwhile, is a distant third. It is in contrast to China, where local players such as Alibaba Group and JD.com are dominating the market. According to analysts, India's e-tailing sector is poised to experience a five-fold growth, surging to an estimated $300 billion by 2039 from $59 billion in 2022, fueled by value-seeking mass consumers. Experts also attribute it to adoption of e-commerce in Tier 2 and beyond cities. Flipkart, meanwhile, has emerged as the biggest player in India. A Redseer report says that its share in Indian e-commerce space was 48% in FY23. But while the revenue has been rising, the profit is still elusive. The company is trying to double down on its effort to raise funds. It also wanted to come up with an IPO, but that plan has long been hanging fire. Reports say that it has now been deferred to 2025-2026. In 2018, the company bagged the biggest deal ever with Walmart, acquiring a roughly 77% stake for about $16 billion in the company. Recently, Flipkart has again raised fresh funds from Walmart amounting to $600 million as part of its latest financing plans to raise $1 billion to aid its strategic objectives. The company is trying hard to achieve profitability ahead of the listing in more ways than one. This includes creating an effective system of corporate governance, improving key finance operations, and trimming down its workforce. The latest financing is likely to value the firm at a 5 to 10% premium to its previous valuation of $33 billion. Attained after adjusting for fintech firm PhonePe's separation from the group in December 2022. So what are the things that are in favor of Flipkart?
5 years ago, we had like multiple platforms. The market is now somewhere consolidated. We've got two giants like Amazon, Flipkart ruling here, and some small niche platforms which are still present. But largely, the market is kind of consolidated. Thirdly, I think most of these platforms have reduced discounts considerably as compared to what it was 5 years ago. With consolidation, with lesser number of players, with competitive intensity coming down, discounts also narrow down as a concept. Fourth very important thing is the advertising revenue. So if you look at the digital advertising space, e-commerce is seeing massive traction. A lot of your search activity is now happening on e-commerce and not on Google, and this is a global trend. Global e-commerce companies are growing at about 25% in terms of ad revenue, and Indian e-commerce companies are growing at more than 40% in terms of ad revenue. So ad revenue is a very big potential for kind of reducing losses or probably achieving a break even for EBITDA for these companies. So I think these 4-5 factors put together, Flipkart's valuation, is quite justified.
With a gross merchandise value at $23 billion, Flipkart is the market leader in India with a strong horizontal presence as per Euromonitor. Currently, 70% of its customers come from Tier 2 and Tier 3 cities. Moreover, a Redseer report revealed that during the 2023 festival season, where e-commerce retailers were expected to garner sales worth 90,000 crore rupees, the overall gross sales touched almost 47,000 crore rupees within the first week itself, with Flipkart alone garnering a business of about 29,600 crore rupees. However, in the financial year 2023, Flipkart India reported a consolidated loss of 4,890 crore rupees, marking more than 40% increase over the previous fiscal, as per business intelligence platform Toffler. Its total revenue saw a 9% growth from the previous year at 56,013 crore rupees in FY23. Business Standard had quoted a person familiar with the matter, saying that the company is still bleeding heavily and needs to show profitability before it goes for an IPO. Every year, the company requires $1 billion funding to make up for the losses. And taking all this into account, will Flipkart be able to achieve profitability in the next 2 years?
It will be difficult for Flipkart to aim at 60 billion valuation for the IPO in the next 2 years, as the latest deals are happening around 35 billion, very close to the Walmart deal valuation. The secondary markets value such companies differently as compared to the private equity markets, and that is amply clear when we had a host of internet platform companies getting listed at high valuations and then crashing post the initial bonhomie. I mean, even Honasa, Mama Earth, the latest one for the IPO, I mean, had to come down sharply on the earlier valuation expectations. So, unless we see a major turnaround and see healthy, sustainable profitability by FY25 for Flipkart, which I think is not possible, I don't see why such huge valuations would be accepted by the markets.
Industry observers say that Flipkart is making significant strides towards achieving profitability. But the path to achieving its $60 billion valuation goal in 2 years on the back of such heavy losses would not be one without challenges.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.